Well, good afternoon, everybody, and Happy New Year and Happy Epiphany, and welcome back to Bull Sessions. This is our Epiphany edition of Bull Sessions. My name is Mark Robertson. I am joined here by my dear long-term investing colleague and magical mathematician, Ken Kavula. Good
The old
afternoon,
guy
sir.
from mid-Michigan, okay?
That old guy that's done a few math problems over the years. And we're actually joined by some camels, and I take my hat off to the camels. They make that long trip and they get there and they hand out the gifts and then they have to turn around and walk back. That doesn't seem fair. Anyhow, we're also joined here by Kim Butcher, probably from Florida.
Hello, everybody.
Good afternoon, Kim. And Matt Spielman is also with us. He'll also be with
Yeah,
us tonight.
enjoying cloudy but 78.
Not bad at all. And Kurt is also eavesdropping in the back room, and which means that the website will be different by the time we're done here today.
Already is.
It already is because he fixes things on the fly, and who does that these days? All right, so Happy New Year, everybody. Let's go ahead and get started. I think 2025 was actually a pretty good year in general. It certainly was for most of my portfolios, and I'm grateful to many of you out there for inspiring a number of investments. And Ken has been red hot, Ken, so I think you should bottle 2025 if you can.
I've had a number of other red hot years in the time of the round table, Mark, and then they cool very quickly. So I'm not getting real excited about it at the moment.
Well,
Okay.
there is a powerful lesson in that because I had a couple years where I led like every category, and then the next couple of years I was pretty much skunked. So yeah, we do have a roundtable tonight. For those of you that are out there and not familiar with the roundtable, it is basically a gathering of friends sharing investment ideas. We've done it monthly since midsummer 2010, and basically our selections have generated about a 16% annualized total return. So we're not wasting our time, and we are proving to be a fairly decent source of ideas for consideration, investment ideas. Pepsi is in this week's update. It's a pretty interesting look. I am really torn about possibly using Pepsi tonight, Ken. It doesn't have enough of a growth rate to make you happy, but maybe I can transcend that a little bit. I haven't decided yet. But again, Happy New Year. And then I just love this quote. It's from your Elegant Simplicity article a few years ago. And I got a number of very favorable comments back after they read it in the weekly update last week. So just making the point that we do this to basically enable us to spend time with friends and family. That would be my encapsulation. How about you, Ken?
Well, I still believe everything that I wrote way back when, Mark. So Manifest has been a boon to my grandchild playing time, and I appreciate it very much.
Good stuff. We did a scavenger hunt in Clearwater Beach, Florida. It was fun. Good stuff. Here's our look at Portillo's, and it's up 7 cents. It's been
What's
up
that
a
on a
little bit.
percentage basis?
Not enough.
Like,
The answer to that is Matt. I can mute you. You can be removed, but not enough is the answer. Um, I do want to put Kevin Galogli on notice that my new cost basis is closer to $7. So there you go.
Okay, next slide.
Next slide. All right, here's our standard disclaimer. No investment recommendation is intended. This is entirely an educational demonstration intended to share our discoveries and basically our awareness and deployment of the methods, analysis techniques, etc., of the modern investment club movement. So we are going to basically share, not so much now, but tonight we'll actually talk about real companies in real time, but a little bit now. But please do your own analysis of any company and make your own decision. Make your own decisions about everything. If you'd like copies of these slides, or if you have follow-up questions or suggestions for future topics, or if you want to give Mark an unserved ticker that will show up on his cell phone, you can send that directly to my cell phone now, or you can send an email to either of those two email addresses on the screen. Any other comments, Ken?
None at all. Let's keep going, Mark.
All right, the groundhog. I'm still not on here. I'm going to still pretend that I care. Here's our top 50. Not a whole lot of changing out in the top 50 or even the top 20, Ken, but I will point out that the competition this year is formidable. Now, that 21% return up from 19.7, and the fact that 3 out of every 5 of us are beating the market, that's a phenomenal statistic, by the way. I was poolside or beachside with a gentleman who was very interested in investing, and when he heard that statistic, he became even more interested in what we as a community are doing. So pretty cool stuff. The stock market averages are shown there. Those are pretty tame in reality. It's a good thing to beat them. And Ken, I thought you might want to celebrate that the monkey has dropped down into our bottom 10 at minus 8.6. So good stuff.
Very pleased. I like the groundhog picture, Mark. That's a good one this time.
Yep, he'll probably stick around till Groundhog Day. But yeah, still quite a few clubs in there. They're a little more spread out. They were making a fairly hard charge. Every time the market seems to make an advance, it almost seems like they settle down or ease down the list a little bit, and then they recover. Just kind of a general tendency that we have noticed. But pretty good national representation, pretty good representation of previous champions, especially when it comes to the groups known as investment clubs. But many of the people that are here with us today are on this list. Top 50 out of 209 participants this year.
Mark, we're getting a comment from Chittum. I hope I'm pronouncing the first name correctly. And he says that he hasn't been able to see the slides on the website since the new website came out, only their recordings. Is there a place that he can go on the website just to get the slides, or should he be sending you an email asking for the slides?
He can send me an email asking for the slide. That is a problem that we fixed. We noticed that it was missing from a couple different sessions. I thought I had replaced them all, but Chittum, if you need a previous one, that's true for any of you out there. Here's the email address, markr@manifestinvesting.com. Just send me and tell me which one you need, if you happen to need one. I'll go back and backfit if I did happen to miss one of them, but I think we solved that problem going forward. Okay. All right, pressing on. Ken, here is the year-end chart. I promise next week I will have the histogram bar stack showing our 17% return for last year in your favorite chart. I meant to put that together for today, but I forgot. So here's a look at this over the last year. You can see how we closed the year in a pretty reasonable range. And here is the current condition with the next quarter already beginning. And Ken, I wouldn't have thought things could get any tighter, but there you have it.
Well, we have a number of new people on our audience today, Mark, so I'll just make the comment that last bar on the histogram, that light green bar, is a work in progress, and it won't finalize itself until the end of the quarter, until March 31st, and then it'll go into history with a single bar that will stay the same. From now until March 31st, that light green bar might move up or down depending on how we're doing since January 1st. But the numbers over on the right-hand side, when they start to cluster as tightly as these four numbers do, it indicates that we're getting agreement from almost all of our sources as to where the market should be moving in the future. And we're getting a good solid read somewhere between 8.5 and 9 for the market moving forward. That's probably a little bit less than some of you would like to have, but it's extremely close to what the market has done over long periods of time on average. So we're looking for average returns going forward. And after 3 years of double-digit returns in a lot of the major indexes, I think that we'd be happy to get an 8 or a 9 or a 10 for this year, don't you, Mark?
Absolutely. And you know, the return for the year basically lands between, you know, +5 and +20 most years. And so, yeah, I would expect that again. There is no crystal ball for this. In fact, you can read a number of different sources about how incredibly futile it is for all of the Wall Street firms to try to say where it will be 1 year from now. It's really an incredible spectrum of uncertainty when it comes down to that. Now, the really cool thing about what they do, though, is they update their forecast like every month along the way until they can say they got it right at the end of the year. But you think I'm making that up? I'm not making that.
No, I don't think you're making it up. I know that they tend to do a lot of sliding around to meet reality in any given moment. Mark, is the quote at the bottom of the page actually from Louis Rukeyser, or is it in Louis Rukeyser's voice?
It's in his voice. It's a Chat GPT thing, but I'd be willing to bet that he said it
Okay.
at some point. And you know, he's basically making the point about, well, we just said it. People are brilliant in January and philosophical by October and adjusting their year-end forecasts. But I love the line with the market behaving like a cat. You can relate to that one, Ken.
Absolutely. Uh-huh.
And I certainly have had a few stocks knocked off the table at 358 within the last year or so. So good stuff. And then here's just a little bit more. We wanted to just spend a moment thinking about 2025 before we play around a bit here. And it was an interesting year because there was all kinds of stuff going on with what are we calling the day that they made the tariff announcement?
Liberation Day.
Liberation Day. Yes, Liberation Day was one example, but there obviously were a bunch of other geopolitical events that are. I listened to a fairly well-versed young man on Bloomberg TV today. Ken, I snuck back on. I try to avoid CNBC, but Bloomberg on, and he was making the point that some of these fairly massive, and from a historical perspective, geopolitical events that are happening are really being taken in stride, and basically they become old news within a few days, and it's not having that much effect on the stock market. In other years when tanks rolled across from one country's boundary into another, you usually had a fairly noticeable reaction, and doesn't seem to have been happening over the last year. And
I'm sorry, finish your thought, Mark.
no, go ahead. I was basically
I have noticed, though, that the market has been very quick to reward companies that present really good earnings, and very quick to punish companies that do any disappointing in their earnings reports. I'm a little bit amazed at the huge moves up and down in companies after they report. And I've begun to watch very closely when companies that I'm interested in are going to report, because you stand the ability a lot of times to lose a good solid 10 or 15 or 20% on any given day, or to add that much to your holding on any given day if it comes close to the reporting of earnings.
Yeah, and there have been a couple in recent days. I think AMD actually had a pretty good bump the other day. Just they hiccuped and mentioned some good news and delivered on results. And I think what you just said is part of the reason that you've been so hot over the last couple of years is you do that really old-fashioned thing of expecting companies to have real profits, earnings. That is just so old school. You must be a boomer. And
well, I'm looking at that chart you sent out to us today, Mark, from the web cam site, the webcast that you
Mhm.
listen to giving the 10 best stocks,
Mhm.
and I wouldn't give you a bucket of anything for most of the stocks that are in that list. I figured that I would at least look at 3 of them, but my goodness, there's some there's some very interesting choices on this list of 10, I will tell you that. And where this earnings per share value for the 10 as a group of 73.88% comes from, I'm having a hard time wrapping my arms around that number for these 10 stocks.
Yeah, well, sometimes averages are pretty tough to do, I guess. I guess
Well,
Micron is pumping it up. Look at Micron in the upper left.
there's a huge bias towards momentum in this list of 10 stocks.
Yeah, and
A huge bias.
just
Yeah.
just to give the audience some background, we had noticed this guy, Steve Kress at Seeking Alpha. He's got a pretty good track record for picking stocks over the last few years. In fact, is he on the groundhog list? I don't think he is. I'll go back and take a quick look. He's been in the leader
I think he
on the
is for
leaderboard.
this year. For this year, I think he is. Uh,
He was on in the top 50, but he's just out of the top 50 right now as a celebrity entrant. But he has been there. But his track record over the last several years in the groundhog would be off the charts. And earlier today, in fact, this is just from noon today, they gave their presentation of 10 top stocks for 2026. So again, this is just a source of ideas. Obviously, Ken would be uncomfortable with obviously a couple of them,
More than a couple.
or a few of them, but it's just an example of where you might find some ideas. The thing I took away from it though, Ken, was his emphasis on a general average 20% growth rate, forward-looking growth rate, talking about revenues, not EPS.
Well, it's a small sample and it's skewed considerably by Micron. That's MU. That's the first one on the list.
Hmm.
But still, even if you exclude Micron, he's still looking, I think, for a growth rate somewhere at the 14, 15, 16% rate. And that's a number we've been using for the last 3 or 4 years, telling folks that if they're going to hit this goal of beating the market by 5 or more points, they're going to have to boost their sales growth, their weighted aggregate sales growth of the portfolio into that range to make up for the fact that we don't have significant dividend yields anymore on the vast majority of stocks.
Absolutely. So there you have it. That is the list of 10 companies. I suspect we'll probably throw together a dashboard and see how they would look in our universe. But the point I would also make, and Ken's already made it, I'll just double down on it, is he is greatly influenced by this notion of momentum. And it's something that we kind of tackled a little bit, tried to understand a year ago, and we're still not sold on the concept. But I will tell you, his performance has been pretty strong. So we will
Well,
continue to at least.
we know momentum when we see it, but I don't think we can find any rational way to predict that it's going to happen.
Yep, and that's why we'll study and watch what they do and how they do it, and see what we can take away. I'm not convinced yet. For one thing, if he's wrong, if data centers end up being not as flashy and profitable as many people think, this portfolio is going to get massacred. It's over 50% data center dependent. So it'll be interesting to see what happens. So I had put that by our best small companies, but we'll come back to that. All right, so just a couple of things. We were just talking about it. Technology is still very important. It should be a fairly substantial part of any portfolio, club or individual. And the thing I take away from the first paragraph is this notion of, and I will settle for cash flow. If earnings are low, but the cash flow picture is strong. I'm pretty much okay with that, so long as the story going forward is credible and, I'm going to say it, Ken, reasonable. Um, I still think that that's okay. I don't care for companies that are not projected to may have any earnings for the next 2, 3, or 5 years. That's a little early for me even. All right. Anything else here? I do think he's calling you out here, Ken, with select financials. Boring can be beautiful. Your regional banks
Well,
come to mind.
and they certainly can be boring sometimes, but a lot of them are extremely dependable in their earnings projections, and then in their earnings actual that they turn out and present to us as reality.
And then Rukeyser, again, this is Chat GPT trying to take a shot at what he might say if he were here right now. He points out that all of this data center stuff is, electricity hungry, very electricity intensive. But if you're late to the party, you're late to the party, and it can cost you if you're not careful. I did notice that some of our small nuclear reactors or modular reactors were doing better over the last few days. They had quite a shot.
Much better over the last few days. My feeling on a couple of those companies, Mark, or even the ETFs that follow the aggregate companies in that group, my feeling is that they had a lot of profits, and folks were kind of waiting until the end of the year or the beginning of the new year to gather some of those profits in. And we saw a sharp reversal at the very end of December, and now they're moving back up again in jumps that are kind of extraordinary. I own 2 of those non-revenue producing nuclear stocks, and they've both moved up about 25% in the last week. So
Yeah, I'm not sure who that is on the other end here, but and what he's done with Ken, but it's working out so far. I should have bought Oklo when you first brought it up. So again, if you don't think Lou,
they do not sell hot dogs, though, Mark. Oklo doesn't. Okay, so just
yet
keep that in mind. Okay, yet. Okay.
Yet. All right, so here's an interesting slide to kind of wrap things up on. If you wonder why our community, especially with the average age of our community, many of us still remember Lou Rukeyser quite well. Why when we heard him talk and basically calm everything down during very trying market moments and that type of thing, I mean, this could be our community talking here. Quality still wins. Try to keep the emotions out of it. I mean, he even says the word fundamentals. It matters that you have earnings. And I just think this is all pretty cool. And all of your favorite words are on this slide, Ken, except for reasonable. But I think we can give Lou a little bit of grace here.
Well, I don't know who's actually speaking, whether it's one of the AI engines or Mr. Rukeyser himself, but right beneath the red line that you drew under fundamentals, I like that sentence that said, and those who did nothing at all, they often did surprisingly well.
Yep. A lot of
Maybe
times.
sometimes the best decision is to do nothing. Yeah.
Yeah. And give your portfolio time to be fundamentally correct. And I really wish I hadn't closed the books on CVS at precisely the wrong time, but that's just me. But there you go, patience and discipline. Again, I didn't make this up. Chat GPT is trying to anticipate what Rukeyser might have said, and I think these are pretty solid ways to think about the year behind us and the year in front of us. All right, so good investing, or could say better investing. Right, here's a quick look. Now, this one gave Ken a migraine earlier this morning, so we'll start right where it matters. This is a 1-year chart, everybody. 1 year. We usually do like at least 10 or 5. 1 year, with a couple of exceptions on there, but 1 year, so we can look back and see how things have done over that incredibly short time frame of 1 year. And I was a little bit surprised that this is as green as it is, but Ken got a headache from the red numbers on the right. But when you stack up these 10 companies, including CVS of all things, which is in the last place in the long-term standings, but it had a good year. That 24% is pretty cool because it only drops to 16 if you leave CVS Health out. And that's a pretty good number.
Mark, again, we have a lot of new people in our audience for this opening bull session of 2026. So I'd like to just make sure that they understand that that final column is not the column that we normally see at the end of a chart like this. We always look at relative return, and that means we're comparing the total return that the stock actually had. That's 3 columns in. We're comparing that to a benchmark, and we're using the Wilshire 5000 as a benchmark. It produced 17%, and comparing it to itself, that's a 0% beat the market. So when you do a subtraction of that 17% from all the total returns, you end up with the final column, and this is where you beat the market. This speaks to the goal of a better investing club when we say that our goal over the long term is to try to beat the market by about 5 points on a yearly basis. So the Tin Cup demonstration portfolio is meeting that goal, which is extremely aggressive, by the way. And the investing roundtable is beating the market by 2 points, which puts it in rarefied territory when you compare it to the universe of ETFs and of mutual funds that we look at.
Yeah, it's in the top 30 out of, call it 1,000 funds at that level, just to show you how special 2.1% is. Although we liked 5% better.
Yeah, we did.
All right, good stuff. So investing with your friends, I mean, a lot of you out there have several of those 10 company names that you see on the chart, and they have probably served you well for quite some time. I find it interesting that Amazon was at the bottom of this list also. Okay, so let's talk a little bit about Buttonwood Bulls. That's our model portfolio. We add $100 to this every month. We've been doing it for a couple of years. This is a chart that I certainly have fallen in love with because it shows the core characteristics of the portfolio from basically back when we got started and what we expect in 5 years. The blue line is the current balance. The red line is the current projected return. You'll see in a minute that that's down a little bit because it's got so much cash. But Ken, our rate of return is, I didn't expect to get back to this level for maybe a couple more years. But we are back above 10.2, and in fact, today it's probably 10.7.
Well, I'm very pleased that that yellow graph, that golden yellow graph, is approaching that red graph. I would love to see those track together, and then we can focus on trying to keep the future par at a rate of 12, 13, 14, 15%, and the yellow can just follow right along with it then.
That is the goal. That is the goal. We want to see that one head in that direction. We will take care of that next week or the week after if we don't spend a sufficient amount of time on it. We do have 849 in cash. It's a pretty good chunk of this portfolio. So we will be deploying that into either an existing holding or finding an exciting, promising opportunity outside the portfolio. And Ken and I will be doing that between now and next week's bull session.
I do think it's important to point out Novo at the very top of the list at 10% of the portfolio now, and point out the fact that I don't think either one of us expected to see Novo recover as it has recovered in the last 4 or 5 months.
No, I didn't either, and that is one of our family holdings also. So we have some United Therapeutics, we have some Green Brick, don't have the next few. But a couple of those other holdings, including NICE, are in the portfolio. IES, and Ken, I think you have a bunch of those also.
I will report, Mark, and I'll talk about it a little bit more at our next session, but NICE is getting some terrible forward projections for earnings from a lot of our dependable sources. Zacks just put out a thing yesterday in the afternoon telling you that they were immediately asking you to sell nice, that there were so many negatives that they saw moving forward that they were giving a strong sell, and that's something you don't see very often from any of the analyst community on a strong sell. So I think that's one of the stocks we want to take a serious look at next week.
Yeah, that one has really kind of bugged me. I'm now beginning to wonder if we've been using the excuse. The company is headquartered in Tel Aviv. If those of you out there that are not familiar with the company, they do basically consulting services and call management services, and they are very highly regarded by consulting firms and many corporations. But they don't seem to be firing on all cylinders for some reason, and uh, we've been using the excuse of the bombs going off overhead as what was keeping investors away. But there have been a number of fairly prominent investors suggesting that some of the luster maybe is off, could be temporarily, but there's something going on there. So I agree, Ken. I think we should dig a little bit deeper. We should promise ourselves, however, that much like what we did with Cognizant 3 or 4 years ago. Do you remember the session where we talked in a very similar tone about Cognizant, and then we didn't do anything, and the next thing we knew, it was down 60% in price?
Yeah, I remember that very well. Cognizant used to be one of the most widely held stocks by model clubs throughout the country. And in a very short amount of time, it became one of the least held stocks by model clubs around the country. But most of the groups that owned a significant chunk of Cognizant got out too late. They didn't listen to some of the warning signs that were there. So we really do need to speak directly to what's happening with the company and acknowledge the fact that we're completely aware of the rule of 5 that says sometimes you can do a study and think you did everything right, and it doesn't perform the way the study says it should perform. So those kind of companies crop up occasionally. I've had a lot of beginners tell me, well, the way you avoid that is don't buy those companies. So maybe there's a little bit of wisdom in that kind of knee-jerk comment,
Absolutely, and I think we should probably also, because I'm really good at this. I'm really good at being stubborn about something like nice or something
You're
like
kidding, Mark.
I'm stubbornly stubborn, and sometimes you have to really challenge that. It's not the time of year to take a tax loss either, but yeah, you basically have to be open-minded and willing to say, you know what, something has changed here. Now, I can point to also a number of times when we've had this type of conversation, you get out the charts and you look at it and you say, you know what, it is just not as wounded as people think it is. So you never know.
We might have had that discussion about one other stock on this list, which shall remain nameless for the time being, okay?
Yeah, we don't want to name it at all. We won't even bring it up at all, but there is one on here that we wonder
Mark, one of our longtime bull session attendees and our good friend Laura Scott has her hand in the air.
Sure.
And Laura, if you'll unmute yourself, you're free to ask your question or make your comment.
Hey, Laura.
You have to unmute yourself, though, Laura. I can't unmute you. And she took her hand down, which means that was an inadvertent hand. So let's continue, Mark, okay?
Yeah, I know she's traveling right now, so she could also be handcuffed when it comes to audio. So let's go ahead. We're going to come back and take care of this next week. Ken, we are 2 months in, so I'm going to declare that we can have a quick update to point out that we are narrowly ahead of the Wilshire 5000 with our 20 selections made on Halloween this past year.
I'll tell you that I'm surprised to see what's at the bottom, because I thought IREN was way at the bottom, and it's greatly improved from the last time we looked at that. That relative return was down in the negative 35-40 area just a month ago. So it's made a move. It still has a terrible relative return, but Optex has now taken over the catbird seat down there at the bottom of the thing, with IREN and NICE kind of chiming in together down there.
There's
I
nice.
like to focus on the top of the list. You know what's different this year so far, at least, Mark, is that we do not have a single wide open leader on the list. By this time in most of our years, we've had one stock that has just taken off and roared itself way to the top and was beating second place by a significant amount. We still have a horse race going on between four of the stocks at the top of the list there.
Yeah, and I've got pretty stubbornly good expectations for many of those at the bottom too. Iron, by the way, is up probably 20% in the last 3 to 4 days. If you don't track that.
And I do track it, and I can agree with you. But we see a lot of pretty good companies on this list right here, and we have a lot of hope for quite a few of them. So.
And again, for those of you that might be new, when we select this list, we use a variety of different sources and interface with a number of wonderful people. And so many of those are mentioned here. We're not meaning to exclude anyone, but these are the ones that ended up getting chosen. And we also point out that up at the top, we have found that taking and looking at promising companies, you can even use it as a screening tool, the Vanguard Russell 2000 growth. And the growth part's important because if you don't do the growth, you end up with all those companies that Ken hates that don't have earnings. So the G is important. But if you use that ETF as a source of ideas, this has been true for the last 2 or 3 years now. We tend to find some interesting opportunities that are nested in the holdings of that exchange traded fund. VTWG, if you want to dig a little bit deeper in there for opportunity. All right. So Ken only lets me show this like every couple months or so. So everybody take a snapshot and we'll move on. And there's that list from today from Mr. Kress over at Seeking Alpha. And with that, I thought what we might do just for a few minutes, Ken, it's 2:40, is demonstrate a couple fairly powerful stock screens at the site. And you can certainly intervene and direct me as you see fit. But what we're doing is going to the new site. By the way, the roundtable is here. Today's bull session, there's a little bit of a summary on 2025. Many of the slides are in this presentation, but also today's weekly update. You'll notice that Pepsi is here and Vital Farms. Congratulations, Matt. They seem to be waking up to your vision for the company. I don't know if
Yeah,
I'm
okay. I'm okay if the price remains a little low until February 3rd.
Is Vital Farms now in the regular value line, Mark, or is it in the extended value line?
It most certainly is in the regular. Yep.
Oh my goodness. Okay.
It was actually just before 2 days before I presented in July was its first publication ever, but it's been in the standard.
I guess I do remember that, Matt. I haven't had a chance to really get involved with Vital Farms because I don't need very many new stocks in my own personal portfolios, but it's on my short list, so it'll get there eventually.
And this one did come up over umbrella drinks on the Gulf of the Americas this weekend, and the consensus the consensus among most people was still an elevated concern about the expensive eggs, Matt, and whether that could be scaled properly.
A simplistic view, and not to denigrate that. That's a great kind of first level thought, but a simplistic view of grocery store marketing leads you exactly to that point.
Mm-hmm.
I'll just say that Vital Farms case studies, they have case studies with specific customers, primarily Kroger, to see how the customers place their product and what they count on their product for. Really just convinced me. It confirmed a number of my hunches.
Sure.
Well, let's try a screen, Mark, and see what happens. Okay.
All right. So let me go ahead and jump out of the PowerPoint for a minute. All I'm doing here is going directly to the Manifest Investing website. And what I thought we would do is let's take 1 or 2 or maybe 3 screens and demonstrate. I'm going to do a new stock screen, and I'm going to call it the important stuff. And I'm going to say we want high return forecasts and excellent quality. That's what we want. That is the end game. That's what we want. So that's what I've put in there. And you can actually go down. This manifest rank is a combination of those two things, the return forecast or par, in combination with the quality. And you can this is all percentile rank. So you can say, show me that if I put a 99 in here, show me the top 1% of all companies. That is what I do 90% of the time when I'm shopping for stocks. I enter that number, I look at the output, well, maybe we'll do that in a second. But in this case, let's go for a minimum quality of 90. And let's not get too greedy. Let's stay within. We had about a 9% average return forecast on that slide we showed you a few minutes ago. So let's say let's go for 14, and let's not get too carried away. Max it out at 24. Okay. And oh, I probably hit the wrong button there. Sorry. But now if I come back in here and look at my screens, and here you see the important stuff. Haven't run it yet, so I'm running that now. So companies that have a good return forecast, I probably did this in the pre-session because this doesn't look like it does. So Kurt, you can jump in here and help me fix this. So what do I need to do here? I need to put the title back in.
Well, Mark, it does have the right description attached to it.
Is Kurt still with us?
No, he had to step away to pick his son up, Mark. Yeah.
So what have I done here? We were playing around with some of the customizable columns before we got started today. So
you've clicked off the mandatory company name column. Can you click it back on?
I didn't know. I didn't know that I could click it off.
Well, you shouldn't be able to.
But I just did. So in the middle of things that he's fixing, I think he may have broke something. Anyhow, so everybody out there, pretend you can see the company names on the left. No, that's not fair.
Actually, can you click on the row and the company would come up maybe?
No.
You have to click on the name. You're getting a finger. Maybe. Oh, that might be to sort it though.
Let me try a hard refresh. All right, so I'm going to go back to stock screens and just simply pick. Oh, I've messed up my own formatting, and I'm going to have to figure out how to fix it. That's unfortunate.
I think, Mark, that you should click in the columns button.
How about reset to auto? It's not allowing me to do that either, I don't think. Presenter's worst nightmare. Going to get yelled at. That's why we don't play around with these before we start. Okay, all I did here was go into one of the existing stock screens. There's a number of them here. Top ranked, so these are top ranked by the methodology, which is that manifest rank as I described it to you. You can then sort them by par. And check that out, Ken. Your company for tonight is in the catbird seat. But again, we're just looking for companies that have the best combination of quality and return forecast. And Matt was tempted to present Vital. We've even heard us talking about Nice. Sprouts was almost presented recently. Brown & Brown was presented at a round table. So again, you can see, here's one that Ken has mentioned a number of times, CLMB, Climb Global Solutions. So, and then if you want to get, and I'm going to get a little bit fancy and hope it works. I'm going to go into the columns, take out the industry name to give myself a little more space. I'll even set the projected yield aside, and then the rank is in there. So that should do it. So then you can actually sort them by, well, you can sort them by quality also. You can see the top quality companies with the best return forecasts. Okay. So Ken, let's try one that you might like here. Which one do you think sounds good?
Well, I tend to put a lot of faith in earnings predictability when I'm looking at my stock screens. And I noticed that we did not sort on that in any way, shape, or form.
So let's go ahead and get, let's do one with growth leaders, at least 10% growth rates. So again, all I did was click on these growth leaders to get this list of companies. And this is a list of companies that obviously have fairly high quality. Some of them are a little bit lower. So these are all companies with at least a 10% growth rate. So you see a bunch of them. And now what I might do is switch in the rank just for kicks, Ken. Take the yield out, give us a little bit of space. I'm not showing the rank here. Oh, I thought I was going to have to add EPS stability. So let's go ahead and sort by EPS stability. And again, you just can basically see that allows you to come up with, again, this list of companies with high quality and a strong growth forecast that also have extremely predictable earnings. I've never heard of Gene DX before, WGS, excuse me. Is that one new to you, Ken?
Yes, it is. So is PM CUF is new to me too.
Very interesting.
Why don't we look at WGS just by clicking on the ticker mark?
I know it's got to be new. It is new.
And there's the issue. We're not asking for any particular par. So this one stays off my radar because go scroll back down to the or back up to the chronicle there. Brand new and never coming close to the sweet spot. The light blue bar is showing the top and bottom of the sweet spot, and it looks like this one's only been in there for maybe 3 days, Mark. I don't know.
Well, for 3 months.
3 months, okay.
Yeah, November, December, January.
Yeah.
So
okay.
one of the things, in fact, we were joking about this before we came online, is people will submit a company, and I now am automatically prompted or nudged or whatever you want to call it, that is now there and needs to be covered by manifest. So when you're on the beach for a week sipping umbrella drinks and these things are piling up, just kidding. All right. So the other one I thought we might do, Ken, is just take a really quick look at the companies with the highest. You may remember when we were back in New Orleans, we did the search for companies that had high core scores. And our basic conclusion was this is probably a pretty good way for a beginner to shop for this kind of stuff. So what I'd like to demonstrate, I think, let's use the triple play. By the way, these are companies that fulfill the triple play criteria, which means that their projected PE is higher. They appear to be damaged price-wise, so the return forecast should be relatively higher. And also they have the potential for improved profitability going forward. So we're looking at this short list. And what I'd like to do is add the core score to it if it's still here. And let's see, I have done something which messed things up here.
Oh, that's probably my fault, Mark. I'll put it back.
That's all right. Well, no, I had saved a formatting or something, Kurt, and I need to go back and reset my settings.
The additional
We
metrics
tried.
probably should have a core score there in the other fields that you'd like to
Yeah.
use.
Well,
I just pushed a fix for this view
okay.
here.
Okay.
Other folks and things.
So again, if you're a beginner out there and using one of our screens, you can actually add the core score to it. And all the core score is the addition of the financial strength plus the earnings per share stability and the quality. And we found that companies that we generally have a fairly high regard as core companies, have a score of 225 or above. So you can obviously isolate them using the core score on the screening mechanism. And that's an excellent way for investors to look for these type of companies. Just out of curiosity, these are triple play potential qualifiers. And let's look at them first as from highest quality down. We've got that now. Netflix, I was thinking about for tonight, Ken. A number of these companies. Let's grab what are the highest return forecasts. Some of those have been presented recently. So again, that might be the type of thing that you add to your search results to winnow out the best opportunities, especially if you're a relatively new investor or if you're a chapter director out there working with somebody fairly new. You might want to encourage them to shop amongst the higher core score companies. Anything else you'd like to add to that, Ken?
Well, no, I think that as you play with this and you're confused by something or having trouble with something, Mark, why don't you show them how they can communicate directly with Kurt up at that upper corner up there where you can talk to, send Kurt a bug. Yeah.
Only if I get this share Mark's phone number.
Okay. But down there at the bottom of the column, Mark has pressed this button at the extreme right-hand side of the screen, the circle with the little person in it. And down at the bottom of the column, you can see report a bug. Why don't you click on that, Mark?
It's coming to me now. Did you just change that?
Here you are. Yeah, maybe. And here you are.
That's your name, Mark. So I get to see it.
Okay.
But you get to see it though.
Yep.
But if you just describe what you're seeing, and Kurt, is there an easy way for them to add a screenshot to the report?
It's almost not needed because the report gives me about the last 30 seconds of what somebody was doing on a page anyhow.
Great.
So
great.
I typically see what people were trying to do.
And Kurt is extremely responsive and very smart. So if you find something not working the way you think it should work, send him something and we'll try to get it fixed as soon as we possibly can.
Okay. All right, so with that, we've got 256. Any questions or comments out there? I will go back to the slideshow and wrap up very quickly. This is just your quick reminder that all of the old sessions, including our first website tour last week, are there at Bull Sessions. If you go to YouTube and you search for Manifest Investing or Roundtable or Bull Sessions, you can get to this page. Or you can use the link up at the top, or you can send either of us an email. We'd be happy to give you a direct link. And again, we keep every weekly Bull Sessions, every monthly Roundtable. You want to go back and take a look at previous Roundtable presentations on certain stocks. Our best small companies, which we were just showing you, that selection show is right here. It's just a little over an hour long where we cover basically the basic story behind every one of the best small companies for 2026. And as we showed you, that is just narrowly outperforming the market right now, knocking on wood. And again, you can go back many, many years if you want to. Matt, would you like to give a pitch for Houston just real quickly? March 28th.
Sure, thanks. Yeah, so we're very excited to be hosting our first ticketed live event. We had one in 2022, a very small one. And to have our very good friends, and I mean that sincerely too, Mark and Ken, along with Doug Gerlach as speakers. What a way to start off. At the end of March, just after the Houston Rodeo, so we don't want to compete with them for floor space or hotels or anything. This will be an all-day event. It'll be 9 a.m. till 3. It'll be a variety of speakers. You will have lunch, and if you are, it will be in person only. So if you are in the Houston area, we encourage you to you can check out the chapter website, or go ahead and just sign up if you want to sign up at the links below, or feel free to ask me or any of the other chapter directors questions, because we will remind you a couple more times yet before it comes in that it's going on. So hopefully it'll be a lot. Well, I know it'll be a lot of fun. I hope we can share that fun with a lot of people.
Real quickly, we are going to have classes on the subject of evaluating portfolios and portfolio management. So, Ken, I don't think we need to go in or read this in any way, but basically,
I'm not going to read it, except I'm going to indicate that we did send out an email to our entire guest list and to the Mid-Michigan chapter, and we asked for submissions for the Jamboree session. I have about 23 or 24 submissions right now.
wow.
And I haven't opened my email in the last 24 hours, so there might be more sitting there. We probably are going to be adding another Jamboree session, probably somewhere in the first or second week of February. We will try to address every portfolio that's been sent in, but I am going to have to put an end date on them eventually here, because we can't do 20 or 30 Jamborees. We knew this would be popular. I did not anticipate it being as popular as it's appearing right now.
Yeah, we'll do our best to streamline it. If we can present 20 best small companies in an hour, I'm sure we can do this pretty effectively also.
Well, and we have discovered, Mark, when we're looking at portfolios, that if we give a couple of really good examples of common problems, then the submissions begin to have a little bit of similarity to them, and we don't take nearly as much time looking at some of the issues as we do at the very beginning of examining the portfolios. So if you're thinking about sending us one, please don't stop the idea. Send it to us, and then we'll be talking about the time constraints and everything else at that point.
Yeah, and it could actually evolve into, I don't know, a quarterly program or something, just kind of grabbing a few that have good moments to learn from and sharing them over time too. I don't know. I'm just brainstorming.
We're getting such a variety of portfolios, Mark. Very small clubs with very little history, very large clubs with a lot of history, model clubs, personal clubs, 1 or 2 personal portfolios. So we're getting an awful good variety of submissions. So send us, if you're thinking about it, please send it to us. All we ask is the stock name, the number of shares of stock, and then share a little bit about the group if it is in fact a group portfolio. Tell us how old the club is. Tell us how many members there are. Tell us your experience level. Are you basically beginners? Are you quite experienced? And give us a little bit of a thumbnail about your history, how you started and how you are continuing to invest together.
We also will protect your identity in our witness protection program. So if you don't want to disclose your identity, we will give you an alias.
And I have received 2 or 3 of those, Mark. So I've promised them faithfully that we won't even divulge anything more than the state that the portfolio is coming from. And that's as close as we'll come to identification.
In that case, I have a recommendation for you, Ken.
Okay.
Don't tell me the name or location of the club, because
because you drop it in the middle all the time. I know.
You know that I have failed to fulfill that mission. All right. So with that, Happy New Year, everybody. Let's hope for a really tremendous, magical 2026. That is the view from my office last week. Um, the umbrella drink is just off the screen. And the picture on the right is the Chicago River on New Year's Eve. Just thought
Yeah.
that was kind of a nice Barry Butler.
Please also don't forget, folks, that we have a roundtable this evening. The New Year's Eve festivities have pushed the roundtable to the first Tuesday in January this month. And so tonight at 7 p.m. Eastern Time, we'll be doing our December roundtable. We invite all of you to be there. We'll be featuring Cy Lynch from Atlanta, Matt Spielman from Houston, and Mark and myself. And we'll each be presenting one of our best ideas for 2026.
That's a lot of pressure. I got to come up with an idea between now and 7 o'clock.
Well, you're not even close to your normal deadline, so I'm not worried yet.
Okay.
Hours,
All right.
hours to go.
All right. So with that, take care, everybody. Best wishes and better investing. And we'll see you soon. Thanks for spending time with us. Take care.
Good afternoon, folks.